Good morning. Today is Thursday, November the 15th, 2018. My name is John Richardson, and I'm speaking to you from Toronto, Canada, where winter is definitely beginning. In any case, this is a continuation of my video series and discussions with people on various issues concerning U.S. expats, people who are accused of being U.S. expats, the transition tax, and I'm today joined again. In fact, I think the last one of these I did before taking a bit of a hiatus was with Monte Silver, so I'm welcoming back today Monte Silver, who is a U.S. tax lawyer in Israel, who has been working very, very hard, consistently, and I would add, I think, very effectively on the issue of the U.S. transition tax and GILTI, which the former, the transition tax, appears to have had the effect of punishing Americans abroad for their past success, an attempt to basically confiscate a percentage of the retained earnings, and the GILTI to punish them for their future. Welcome back, Monte. How are you?
Excellent.
Okay.
How was the vacation?
Sorry?
How was the vacation?
Vacation. I wasn't on vacation at all, but not all hiatuses are vacations. I was only a break. It was only a break from talking with you, so it has been a while. But some people may not have seen the first interview, so I'm wondering if you can summarize, sort of in a nutshell, what the issue is with it. Let's start first with the transition tax. What's going on here?
Yeah, so the transition tax was a goal. The goal of the transition tax was to get to the $2.4 trillion that the Googles and Apples of the world were holding in foreign subsidiaries. So they imposed a one-time transition tax that imposed a 15.5% tax on all the money that these companies were holding in their foreign subsidiaries.
And these corporations, these were owned by common shareholders. These weren't like owner-operated businesses like yours, right?
Company. No, the intent was to go after the Googles and the Apples, but the way that the law was drafted, it said that if you are an American person owning shares in a foreign corporation, then it applies to you. So I am in essence Google Inc., and my little corporation is Google Israel. So I'm basically sitting in the standing in the shoes of Google, and my little corporation is Google subsidiary. Only mine doesn't have $2.5 trillion in it, and most Americans abroad, have pennies in it, and they're subject to this very draconian law.
Okay, well, let's take a very simple example. Let's imagine that you had been successful enough over the years to have, for example, say $1 million in retained earnings sitting in your company. How much of that does the United States want, and how does that work?
The calculations are extremely complex, but for simple purposes, Google America will pay 15.5% on all its money it held abroad in cash, a one-time tax on that amount, 15.5%. And as would have it, we individual shareholders, the Montes of the world and Johns of the world, we don't pay 15.5%. The way the law was drafted, we pay 17.43%. So we actually pay more than Google and Apple, if we could even understand the law. Those that decide that they want to comply rather than just become ostriches, we would pay more than Google and Apple.
That's totally incredible. So you mean an individual Monte has to pay a higher percentage of the retained earnings than a company like Google?
That is correct.
They must hate you for not being a corporation.
It's kind of ludicrous.
But I thought it gets even worse than that. I mean, doesn't Google on a going forward basis get an exemption for a tax exemption for money earned abroad?
Yeah, well, that's GILTI, which the transition tax applies on earnings that were earned for the last 30 years, from 1986 to December 31st, 2017. Going forward from January 1st, there is a GILTI tax, which is a tax on annual something. We'll call it gross income. It's an extremely, extremely complicated thing, where Google gets foreign tax credits and 50% deductions by law, whereas Monte, or all the Americans abroad or individual shareholders, get 0 foreign tax credits and 0 deductions based on the way that the law is written. So I would end up paying double tax at 37%, up to 37% in America, plus the 25% I pay in Israel, and that's sort of 60-some percent, whereas Google would just pay what it pays in Israel, so 20-some percent. So I'm paying 2.5 times on an annual basis, GILTI tax, more than what Google would pay.
Absolutely shocking. So, to use our practical example, so we have, say, Monte Inc., 17.54 percentage on $1 million. So if I got that right, that would be 175,000, or slightly around, okay, that you'd have to pay for the privilege of what? Nothing. This stuff was not, these retained earnings were never taxed at the time they were earned, right?
Not in America, but I paid tax in Israel. The corporate tax is 25%. You know, Israel is a very, like in Europe, in Canada is a very high tax jurisdiction. So we're not hiding, we're not living in, I don't know, all these fancy places, but we're just living our lives in high tax jurisdictions, and we're paying taxes.
Well, of course you're not hiding. I mean, what you've done is it's essentially a punishment for compliance. You file these 5471s every year, and in our previous interview, I think you referred to as Schedule J, which basically alerts them to the amount that's subject to this, what I would call a one-off retroactive confiscation. Okay.
Yep.
We all agree that this is horribly unjust, horribly unfair, impossible to comply with. What are the options?
So ever since we got the 1-year extension on June 4th of 2018, I've been trying very hard, both in Congress and in Treasury, to get a permanent exemption. I went to Congress and met 37 congressmen and senators on the Ways and Means and Senate Finance. A lot of smiles. People were very nice, very sympathetic. They really felt for you. But when it came time to actually do anything, especially on the Republican side, because they're the ones that control the committees in the 2 houses, beyond the nice smiles and the nice handshake, there wasn't anybody to really pick it up. I did get a draft bill sent by one Senate office, but they said, listen, Monte, we're doing this as a favor to you. This is going nowhere. It ain't going to happen, to give the exemption to small businesses. And then the focus went to the, I think we maybe talked about this briefly, then to the Treasury, because once they issued the regulations for transitioning GILTI taxes, I realized after much research that they had violated 3 laws: the Regulatory Flexibility Act, the Paperwork Reduction Act, and the American Procedures Act. 3 substantive laws. And the violations were quite severe, and they do grant judicial review, meaning we can file a lawsuit. So I've been trying to negotiate with Treasury now for since August, since the regulations came out, and it's very, very difficult. They say that they don't have the authority to grant this because the law is, says that we're on the hook. And that's not true. The 3 laws that I cited definitely grant them the authority to give us exemptions, and a court can enforce that. But nonetheless, they're not making our life easy. I will point to one development since our last talk is 965I, transition tax, section I. It grants for S corporation individual shareholders a lifetime deferral of transition tax, meaning if, let's say, Monte, I own my corporation, but let's say I didn't own it directly, but rather I'm living in America and I have an S corporation, and that S corporation owns Monte's shares in Israel, in my Israeli corporation. In that case, because I'm owning this in a transparent S corporation, I get a lifetime deferral. So I asked Treasury, wait, you're giving these individual shareholders of a transparent corporation lifetime deferral. We're individual shareholders without the S corporation in the middle. We're the same thing.
Right, okay, so just to pause you here for a second, because it strikes me that this is an extremely important point.
It is.
And I'd like to actually go back a minute just to make sure that people understand structurally what's going on. So, and you tell me if you disagree with something I'm saying. So it all begins with U.S. ownership of a controlled foreign corporation, correct?
Right.
Okay. And U.S. ownership can take different forms. It could be a C corporation. In other words, Google USA could own a controlled Google foreign corporation. It could be an individual, for example, Monte, presumably owns an Israeli legal services corporation. Or the third way is that under U.S. tax law, there is such a thing as an S corporation, and the S corporation could own the CFC, but in the case of an S corporation, it's transparent vis-a-vis the individual.
Right.
So everything that happens with the S corporation sort of flows through to the individual. Is that correct?
That is correct.
Okay. So then what you're saying here, and I think this is a very, very good point, is that, for really no reason that I can imagine, and maybe, that sets you up for your next question, but for no reason I can imagine, this legislation is giving a benefit, lifetime deferral, to individuals who happen to own their CFC shares through an S corporation, but do not give this benefit to individuals like Monte who really cannot own it through an S corporation, I suppose, because you're based in Israel. Is that correct?
No, as a citizen, I can own shares in an S corporation. There are restrictions on to who can be a shareholder in an S corp. If I'm a citizen, no problem. If I'm a non-resident alien, I cannot. But as a citizen, I can own S corp shares in an S corp. And I just want to, for you viewers, what does S corp mean? Small business corporation. So the definition of an S corp is for small businesses. It has a lot of limits on who can be the shareholders. So the law does protect small businesses if you own it through an S corp. But if you own it directly or through an LLC or a partnership, no, only if you own it, the CFC, via an S corp. And I can guess your next question. Why only S corps? There's a lot of LLC people.
Funny you should anticipate that. Okay.
Of course. And so the answer is because of the great way that the lobbying works. There's a very active S Corporation Association called S Corporation Association. And it has a lot of members, and they pay a lot of money to the lobbying. And that lobbying association went to Congress and said, if you're going to pass this transition tax law, we will fight you and whatever unless you give us this lifetime deferral. So they got it. But not individual shareholders, not LLC owners, and not partnership owners who own shares in a corporation through these entities.
Isn't a better way to put it that one group of individuals, those who own their shares through an S corporation, got it, the exemption, and other individuals didn't? Isn't that a better way to put it?
Yeah.
Okay. So what we're dealing with then is a situation where basically individuals who decided that they wanted the degree of complexity of an S corporation, but they're still individuals, got this deferral, and people who don't have an S corporation for any reason under the sun do not. And your discussion with them then is that you're pressuring them to what?
I said, listen, we are individuals and they're passed through and disregarded the S-Corp shareholders. I know that S-Corps can actually be pretty large as long as it's a family business, but you can have massive family businesses. You can have a $1 trillion family business. And I said, listen, individual shareholders that I know are much smaller than S-Corps. They're the smallest of the small. It's a one-man corporation. Surely you can find a way to treat us like the individual shareholders of the small corporation, especially when there's a law out there called the Regulatory Flexibility Act, which protects small businesses. How can you not give us that same treatment? I don't understand it.
Well, I think if nothing else, the law is frankly, I think it's the most unjust law I think I've ever seen come out of the United States in terms of its impact on Americans abroad. But I mean, these are just things that compound the injustice, if for no other reason, but that, I do appreciate your comment that any U.S. citizen can own an S-Corp, but it seems to me that, people who live outside the United States kind of operate within the legislative framework of where they live, and it wouldn't occur to them necessarily that they should be, I really should be running my local company in Israel. Really, it should be run through a U.S. I mean, that's just nuts. I mean,
Actually, John, the thing is this, it is nuts. But this is the difference between a person who looks at things from outside versus someone who looks at them from the inside. When you talk to very astute CPAs or tax attorneys who live in America, they'll say, I have this great idea. Why don't you establish and run your business through a C Corp or an S Corp? For one, it's too late for the transition taxes. I can't. But I said, well, why would I do that? I live in Israel. I'm going to create this monstrosity of a structure just for some crazy reason, and who knows the implications and the cost. But we look at things from a different perspective than someone who's sitting inside America. That's the way they would think.
I imagine that is exactly how they would think. I mean, but even that requires a level of sophistication that I think is beyond the vast majority of the people who work in this area. But in any case, so that is where we are. Now, I think that's a very interesting update, and I think a very, very good argument. So I understand the next set of regulations is coming out reasonably soon, even though we don't know the date. Now, are you expecting that the content of the regulations will address that issue directly or address it by not addressing it?
If I had to bet on whether we would get an exemption, meaning people who are up to a certain dollar size would be exempt from the law, I would say the chances are next to zero. That was what we were shooting for a while. Until just a month ago, I came across this 965I, just to show you how complex this law is. I've been reading this stuff for 7 months now and negotiating with Treasury for 7 months. And I was the guy who said, wait. All of a sudden, I was talking to this guy in America who was an S-Corp. He said, yeah, but we have 965I. This was a month ago. For 8 months, I didn't even realize, nor did Treasury ever think of this, because this law is like a behemoth. It's just so complex. So the chances of us getting a lifetime deferral like the small corporations, I would say, is 20% at this stage. I'm not too optimistic, but there were times in the past where I was optimistic, and if there's room for optimism, I'm an optimist by nature, but I'm a realist optimist, and now I realize how Treasury and they think, and the bottom line is also there's not too much sympathy for Americans abroad, I must say.
Okay, so you're an optimist realist, but you're also, I think, and I thank you for this, you're very persistent. And at the end of the day, without being persistent, there is no chance of success. So, Monte, you are creating the chances for success here, and I'm sure that a lot of people are very grateful for your persistence. Now, so let's imagine here that Congress says no, Treasury says no, everybody says no. So now there's three branches of the U.S. government. Two of them are saying no, Congress saying no, Treasury. I guess we have one branch left, which would be what?
Well, okay. Well, there, of course, that is the main focus now, and
The courts.
I told Treasury all along, you don't want. Why would you want to get into a legal fight where you really have violated three laws, cut and dry? I mean, the record that I've given, that I've created with communication. Why do you want to waste time on small businesses when you have the Googles and the Apples and so many regulations to issue? But nonetheless, they're not bending. So that forces me, and I try to get this point across in not so subtle ways, saying, you guys, we're going to have to file a lawsuit. And
yeah, you're right. That's not very subtle.
no,
You use that sentence or an equivalent, guys, we're going to file a
More
lawsuit.
direct than that.
I like that.
Yeah.
Okay, so imagining, and I think anticipating at this point, because I don't see there's a huge window period left here, really. But anticipating a lawsuit, let's talk about that. How would that work? Who would be the defendants? What would be the legal claims?
Okay. Well, the legal play, the actual, because this is like real. This is the school of realism. So the legal claims I know, and the facts I know, and the record I've created through all the communications with Treasury, the legal claims I'm not worried about. I think we stand on pretty solid ground. There are issues. One thing that has been discussed, I've read your piece on the Regulatory Flexibility Act, is the definition of what a small business is. And I know that I'll probably surprise you with this. The regulation of what a small business is, there is some ambiguity as to whether that covers businesses that are abroad. So, I mean, that's just those. There's also ambiguity whether we can get an injunction to stay the law. So when I say that the law is, we have a very good case, we do have a very good case, and I think that we have very good claims to answer those two issues. And I've researched this pretty significantly. I've read all the cases, okay. But it's the real world issues that really will dominate whether a lawsuit will be filed, and it will be filed, such as finding a law firm in DC that has expertise in this.
Expertise in what precisely?
In administrative law.
Okay.
Filing lawsuits against the Treasury or other administrative agencies for breaches of procedure, basically. The three laws that they breached are procedural safeguard laws.
Okay, and to repeat, so there's the Regulatory Flexibility Act, what was the second one?
Paperwork Reduction Act.
And the Administrative Procedure Act, is that the third one? Okay.
That's the third, yeah.
All right.
So those are the three. So you need a law firm that has experience in litigating against agencies on administrative law and preferably procedural matters. There are very large law firms, and there's sole practitioners, and you want to get obviously the best you can, subject to the fact that there's money constraints, of course. And then you have questions like, who's going to be the plaintiff in an action? The defendant is Mnuchin and Treasury. That's not an issue. But I've talked to a lot of people, and I said, hey, Mr. Joe or Mr. or Janice, do you want to be a plaintiff against the IRS? John, what would you think would be the reply to that kind of question?
I would think absolutely yes. Am I wrong?
I won't use an F word here, but
I'm very wrong.
I think you're pretty wrong.
No, I hear you. I hear you. I've been through this, with other, yeah.
That would put this on their shoulder and say, okay, let's go fight the IRS with my name on the lawsuit.
Okay. But there are people floating around who have identified themselves very publicly on this issue.
Yes, but do they have standing? Meaning, can they be the party to file the lawsuit by law?
Do you have to pay the tax to file the lawsuit?
You have to be subject to this tax.
But do you have to have actually paid it?
No, you don't have to actually have paid it. That's a whole different issue of refund lawsuits.
Mm-hmm.
So in dealing with the lawyers who have, and I've been dealing with them quite a bit lately, there are very interesting things that can be done here. There's lawsuits for refunds where a person has paid and then files a lawsuit for refund, which is a relatively simple lawsuit. Then there are people who might just file a lawsuit, like I plan to do, to saying that there was a breach of the laws, and whether or not I paid, I'm damaged by these laws because I have to pay an accountant a bunch of money, and or my competitive advantage has gone down the drain. I'm damaged, whether or not I actually paid. So it's not trivial at all to find a plaintiff.
Yeah, no, I agree. I understand that totally, absolutely. Yeah. But I mean, I at the end of the day, I'm sure that there will be at least one, if not more, who are willing to take this on. These lawsuits cost a ton of money, as we know. I know that you're looking to sort of crowdfund this to a degree. Is that a reasonable way to put it?
Yes and no. Yes, I don't.
You would take the money from individuals who want to donate.
Yes.
Okay.
But that the word and from certain organizations that would like to be parties to a lawsuit. That could be Arrow. That could be Democrats Abroad, that can be ACA, that can be Republicans Overseas, and that is in no order whatsoever. That can be the Escort Association of America. In researching these, I've come to the conclusion that these associations have standing. They can bring a lawsuit. They can be plaintiffs. Mm-hmm. So I would assume that if someone wants the exposure of this kind of lawsuit, and this is a precedent-setting lawsuit, that they would contribute some money and also be the plaintiff. So that's one source of fund. But the main source of funding is going to be from the private people who are impacted by these laws. And what I have done, and I think it's proven quite effective, is I've offered my services, as I've been doing for the last month or two, pro bono for free to small businesses that want to comply but just don't know how or don't have the CPAs that know how. So I've been telling them, listen, I'll help you comply, but you're going to make a nice donation based on, how much I can help you.
Sure.
So that has turned out to be a very, very good approach, because people appreciate the fact they want to come clean or they want to comply. They don't know how, and I know how. And I can get them to make a donation, and that donation goes towards a lawsuit, which is going to help them anyways. So that is proving to be a good way to raise money, and it's not $10, $100. These are, small business people. You can save them tens of thousands of bucks.
Yeah, sure. I mean, they would pay the fees anyway, to somewhere. Yeah, I think that's very, very good. Now, what I would like would you to be send over what would be the mechanism, because this video will go up obviously for how they can contribute to this initiative, because I think this is extremely important. So please do that. Now, on timing, when do you envision that this thing would move from sort of the theory of the lawsuit to the reality?
Under these laws, you can only file a lawsuit once the rule is published. So in any case, we have to wait for the final rule. But I would like it to be filed days, a week, 2 weeks. after the ruling, because I've told Treasury all along that if they screw with us, there will be a lawsuit, and there will be a lawsuit.
Do they understand that?
Oh yeah, they are preparing for litigation. I have been told by numerous people. I have that in writing.
That's wonderful.
That they are preparing for litigation.
That's wonderful. That's wonderful.
Yeah.
All right. So,
and that is also one of the reasons, if you'll know, up until now, the website that I've used has been Americans Abroad for Tax Justice. So now it's been converted to Small Businesses for Tax Justice, because we really have to find a way to make this an American thing.
well, not only that, but the organization has to be aligned with the issue here. And if if we're talking about this S corp issue. I mean, there may be S corps that are big businesses, but they're primarily smaller businesses, I think. That's, that is very, very interesting. What I'd like to do here, just as we wind down time-wise, you and I have thought about this just, a little bit, for the last 6 months or whatever, but I think this is probably overwhelming for somebody who's just kind of learning about this. So I'm going to just go through a base sort of summary, I think, of the points that have been covered over the last, 6 or 7 months. And, if you want to add or delete or whatever, just by way of synopsis here. So this whole issue began last December with the signing of the Tax Cuts and Job Act. There are two sections of the Internal Revenue Code that were amended. Section 965, which is the section that deals with the transition tax, absolutely incomprehensible. And Section 951A, which deals with the GILTI. In any case, both of these are under the Subpart F provisions, which means that they apply only to controlled foreign corporations. And to qualify as a controlled foreign corporation, it has to be a corporation with over 50% ownership of United States shareholders, and a United States shareholder is defined as one who owns a minimum of 10%. So that's what we're dealing with. Now, what the law says is that you look to the retained earnings of the corporation back to 1986, and they're going to impose some kind of a lump sum confiscation on that, a higher confiscation if you're an individual and if you're a corporation, which is just so right, just, and equitable that Monte should be punished for his success and Google not. But, hey, we're dealing with the United States. People were horrified by this, so people like Monte have stepped up to the plate, begun to analyze this, and basically the analysis so far has included snippets of how can taxes paid in the foreign country be used to mitigate this tax, assuming that people are willing to pay, and that's either on the corporate level, the 962 election, or just straight foreign tax credits for dividends that are paid out. So we have that aspect of it. We have discussion of tax treaty aspects of that. And then we have the whole issue of how do we get this problem changed. Now, on the advocacy level, of which, you certainly have been a leader, we also have Charles Bruce at ACA, who proposed various things. Some of these things have to do with, oh, come on, you kidding me? A mop-pop operation subject to this, given the cost? Why not, create some kind of a floor before this kicks in? That's one aspect that's been considered. Another aspect is, now, your new one here, the S corp issue, which is very, very good. And all of these things have been explored, worked with, I wouldn't say exhausted, but we are reaching the point for practical purposes, that is, people have to file tax returns where final decisions have to be made. You've made the point previously, and I agree with you totally, that there will be very substantial noncompliance with this, first of all, for the very simple reason that it's so complicated that even you and I have been thinking about this for a long time, especially you don't understand the whole thing, and you should be proud of that, okay? Because if you did understand the whole thing, you'd probably have an additional set of problems in life. They can't understand it, they can't comply, and even if they understood it, where in the world do they get the money, to pay this lump sum? Because it's not a realization event, there's no taxable income. The answer, of course, from the point of view of the U.S. government would be, well, you can have an 8-year payout, but that just has to do with how the tax is paid, not whether it's paid and the amount that's paid. So that, I think, brings us to today, where after all of this work, we are now left with the final step of having to file a lawsuit to explore these issues. Is that a fair summary?
Yeah, I think it's a fair summary, unless I'm surprised. And you know what? There are surprises in life, and maybe Treasury will give us that same treatment as Escorts. It's not totally unreasonable. It could happen. An exemption will not happen. A lifetime deferral like S corporation shareholders, yes, that could happen.
But you would think that they would consider the fact that as the way this thing is written, the people simply can't comply with it. I mean, if they were to give the S corp-like exemption, at least people could comply. But they don't care.
They don't. I won't say they don't care. I mean, Chip, who gave us 2 exemptions, I'm now not on great talking terms with him, but he was the guy who got us the 2 exemptions. So he cared, and he knows the problem, but either he is saying, Monte, I don't have the authority to do it. And I pointed to times where the Treasury has created, pulled rabbits out of hats, and big rabbits out of big hats. Yep. And the Regulatory Flexibility Act gives them the authority. I don't get it. I just don't get it.
Yeah. Okay. Well, this is still an ongoing thing. It's a work in progress. I imagine in a few more weeks we'll have something more to talk about, and I suggest that we pick this up in a few more weeks when we have something more to talk about. Thanks for chatting with me this morning, but thanks even more so for all the incredible work that you've done on this for like the last 7 months. I think that you should be knighted or get some kind of an award for this. It's been an incredible ride, and you've certainly been in the pilot seat for this. So thank you very much, and do not get discouraged, because, Monte, I'll go back to something that I said earlier. One thing I've noticed in life is this, okay, that persistence is the most important necessary condition for success. It may not be sufficient, but it sure is necessary. So keep up that persistence. Thank you so much.
Thank you, and I couldn't agree with you more. Persistence is the one and only factor that decides who wins and who doesn't. And I'm persistent. Don't worry.
Awesome. Thanks so much, Monte, and we will be picking this up again in a few more weeks.